YouTube channel. This is your girl, the Random Trader. This is the 6th episode of the backtesting series. Remember, we did already the backtesting series from January to March. In this episode, we're going to go April for specifically CADJPY for the year 2023. So stay along and you see how the backtesting of April actually went. If you have questions, don't forget to comment in the comment section. Put your question and I'll get back to each and everyone who actually asks. So let's get to the video. Remember, the first thing that we always do before going to analyze the market, the first thing remember to always do is going to the calendar. What the calendar will do, the calendar will give you the roadmap on a day which is of a high probability and a day which is not of a very high probability. You know this because there are days that I mentioned in all my past videos that I look forward to not trade on that days. So if you want to know those days, go back to the videos that are on my channel, see those videos. Then you have an insight exactly of which day I actually choose to stay out of. So let's go here on the calendar and we see which days are we going to stay out of the market and which days we'll actually trade. So when we go to the calendar, I always say that I choose to stay away from the market on the first day of the first Friday of the month. And you can see here the first Friday of the month is on Friday. I choose to stay away because this is when the NFP is on. You can see here we have non-farm payrolls. This is what we choose. This is what I choose to stay away from. So from April 3rd to April 7th, I will not be trading on that day. The only day that I'll be looking forward to trade is April 10th and April 11th, but then April 12th, I will not be trading. Why? Because you can see we have here this CPI, and most of the times I don't trade on these days of CPI. And since we are trading CADJPY, also if we have CPI of CAD, I will not be looking forward to trade on that day. But specifically on this day, Wednesday, April 12th, you can see here we have USD CPI. And here, even on Thursday 13th, this 13th April, I will not be trading on this day. Why? Because you can see here we have PPI, USD PPI, so I will not be looking forward to trade on this day. And remember, I don't trade on Fridays, so the only days that are valid to trade on the month of April is Monday, April 10th, 11th, and here we have 17th. 18th is not valid because we have CPI of CAD, then 19th, then 20th, then 21st, and all other days will go forward according to the way backtest. So let's go right now to Monday, April 10th. Let's go to daily and we see if the daily rule is actually checked out on this day of April 10th. Going to daily, remember we can only trade 10th July if the candle, which is on Friday, if that candle actually closed bullish. We cannot be trading on Monday if the candle on Friday actually closed bearish. Remember here, since January of this year, you can see even the other videos, backtesting videos that I've released, we are still bullish on this CADJPY pair because what I look at is the main trend, the long-term trend, and not the short-term trend. And you can see here on the long-term trend, if you zoom out in the chart, you can see we are very much bullish, and that's what I based on. That's why to actually look forward to buy on this market, you should wait for the previous daily candle to close bullish for you to actually buy on the following day. And you can see actually on this day our rule is actually ticked off. So let's go in M15 and search for entries on this day. We're here on the M15. Remember, the first thing you always do is measure the impulse move. Let's first measure the impulse move. So it's from here down, because this move started from here. This is not a very big retracement here down, but then that is not necessary. Let's just measure from here down to where the price is. So if you measure this impulsive move here, you can see this is more than 45 pips. And I said if an impulsive move is more than 45 pips, what you do is you wait for a 40 pips retracement before you can look for the entry pattern. So what we do is we wait for an entry for the 40 pip impulsive 40 pips retracement, so that we can actually look for entry pattern, and that entry pattern will be the W now, since we are looking for buys. So let's wait for the 40 pips retracement. So remember very well that what you do, you first draw this that measures the pips, the number of pips. So here you draw it from up here to the swing high to where the 20 pips is, which is down here. And what you do, you just wait for the 40 pips retracement to be done. You can see there we already have the 40 pip retracement done. So here what we do is we wait for a W pattern. W pattern is something like this. Let me just draw it so that it's not the must for it to be like this. This can be up here, and it's not the must that we should have many candles. We can even have 3 candles. We can have one candle that goes down, another candle that goes up, another candle that goes down, another candle that goes up. So it's basically 4 candles, not 3 candles. We can have those 4 candles, and that will be a W pattern. It's not the must that we have a series of many candles making this W pattern. So this is what we're going to wait for. Then after that, we just wait for neckline retest, which is somewhere here, a neckline retest. But remember, before we search for an entry, we have to wait for the H1 time frame to align with the bias before we actually enter this neckline retest. So let's wait and see if we are going to see a W pattern from here and enter from exactly that place. Here you can see there is a potential W pattern which is being formed. Let me remove this because it's no longer needed. You can see here we have this candles down, and this one candle is going up, and this one candle is going down. So basically we have something like this. Here down, up, down, up. So right now we're waiting for another candle going up so that we search for a retracement down to this neckline here, then an entry going up. So that is basically what we're searching for. Let's draw our neckline, which is down here. Our neckline is down here. So let's see if the candle will actually close up here. See there, which it did already. So here the good idea is going to H1. After we see a candle has closed up to the neckline, what you do is you go to H1 and you check the previous H1 candle, if it actually closed bullish, for you to actually enter a buy entry here. So let's go to H1 and we see how it actually closed, the previous H1 candle. When you go to H1, you can see here that the previous candle, which is from 10 to 11, actually closed bullish. So what that means is that we can enter buys if you get any W at from 10 to 12. As long as this previous candle is bullish, it gives us a go ahead for our buys. So it means that W pattern is valid, and we can actually look to enter our buys when it comes to retest the neckline. So let's go to M15 and place our buy position. So going to the M15, let's place start buy. So buy limit is set. Yeah, buy limit is set there. Let's see if we're going to get tapped in. There, we're already tapped in, you're already in the trade. Remember here, this is when you set your where 20 pips is going to be, so that you actually just 1 pip above this, so that you set your BE. Let's see how this will actually go. So there, this trade was pretty fast actually. So there you'll be setting this trade to BE, and then you wait. So from here, the only chances of this trade is that it's either the trade ends in BE or the trade actually hits TP, because right now this trade is actually risk free. Let's see. Yeah, and there you'll be getting your TP. There your TP will be hit. So this trade will be having 3R on this day. 3R. 3R in this trade. So in April, this will be your first trade of the month. So right now, remember, we do not trade if we hit TP on a day. We will not be trading the following day. So the only day that we'll be looking forward to trade, if the trade is valid, is on 12th April. Let's go to the calendar and we see if this 12th April is actually a valid day to trade. Like I said before, 12th April is not a valid day, so we'll not be looking forward to trade on this day. 12th April, 13th April, and 14th April is not a valid day to trade. The only days that we will be looking forward to trade is on 17th April. So let's go on daily and we see if the daily rule is actually ticked out so that we trade on this day. So you can see here we're on the daily, and the candle here on Friday, remember 17th April was actually on Monday. So for us to trade on that day, 17th April, it means Friday, which is on 14th April, should have closed bullish for us to look for buys on Monday. So you can see here, actually on 14th April, this candle actually closed bullish. So it gives us a go ahead to go in the M15 to actually search for an entry. So let's go on the M15 and actually search for an entry there. So you can see here, we're in the M15, and remember, the second you get to M15, the first thing you do is you measure your impulse move. Our impulse move starts from here, and if you see, we have almost 94.6 pips. So what this means is you have to wait for 40 pip retracement for you to actually, for you to actually enter in the trade. You have to wait for the 40 pips retracement to be done before you can actually look forward to place any trades at that point. So let's wait for the 40 pips retracement, but then let's measure first the retracement is from here to here down 40 pips. Let's put it up here. There. So let's see if we're going to get that 40 pips retracement. Okay, you can see there it's going up. So you also have to change according to the way the market is going, because the high is no longer here, the high is up here. Let's see. Okay, so there you can see we already have a 40 pips retracement, and then after this 40 pips is met, you can see here this AW pattern is being formed, because we have a down candle, an up candle, a down candle. So the only thing that we are missing is an up candle that breaks this neckline here up. Remember, we need 4 candles: down, up, down, and up. That will create your W pattern. So from here, let's draw a neckline. Our neckline is somewhere here. Let's see if we're going to get a candle closure up. For candle closure up, you can see there we got a candle closure up. So this, let's go to H1 and we see if the candle, you can see here, this is 2:30 p.m. So the previous candle is from 1 to 2. So the candle from 1 to 2 should be bullish. If it's not bullish, we have to wait till other bullish candle is printed for us to be placing buys here at the neckline. But then let's go to H1 and we see if the previous H1 1 to 2 actually, if that candle closed bullish. You can see here on the H1 time frame, this candle here from 1 to 2 closed bearish. So it means we do not enter any trades from 2 to 3. The only trades that we'll be looking forward to enter is from after this candle has closed. And only it should be, this candle should close bullish for us to be looking for buys. So let's see till when this candle actually closes for us to be looking for any buys. Let's go to M15 and you see what time is this. This is 2:30. Let's see at 3. Okay, we are not yet in the trade there. Okay, there we had 3. Let's go back. So let's go back. Since we're just back testing, we can actually go back. So you can see here, this is 2:30. This is 2:30. Let's see another candle. The candle here is 2:45. So from 2:45, let's see. Let me reduce the speed. Okay, so this is from 3. If you go in H1, you can see the other candle that we were waiting for it to close actually closed. It's this one here. So as long as this candle actually closed bullish, we can actually look for a retracement entry at this neckline here. This neckline here down in the M15 time frame. Let's go in M15. So in the M15, so our entry would have been there, the neckline here, and then remember we go break even after 20 pips move has happened there. So let's see how this trade goes. Let's increase the speed. We are not BE yet, so there would have been BE. Let's see how the trade actually goes. From there, let's see how the trade actually goes. Okay, so you can see would have held it to overnight to another day. Let's see. There, so there, this would have hit TP. So this is another winning trade for us in the month of April. So here, this is 3R again, and remember, we're up so far 6R in the month of April. So you can see here, this is on 17th April, so we'll not be trading on the 18th April because we already had a winning day. Let's see if 19th April is actually a valid trading day. Wait. So if you have reached this far and you have not liked the video yet and you have not subscribed yet, let's take 2 seconds and we give you that time to actually like and subscribe this video. Okay, so let's go to the video. I hope you guys are learning this. If you have any questions, don't hesitate to comment down there in the subscription, not the subscription actually, in the comment section. Ask questions and I will reply to you. Don't forget to also follow my Instagram. I'm posting too many reels there. I'm actually very consistent with that. So let's go to the video. Going to the calendar, you can see here Monday, April 24th. No, we're not there. Sorry. Wednesday, 19th April is actually a valid trading day. So let's go in daily and we see our daily rule if April 19th is actually a valid trading day. Going to the daily time frame, you can see here 18th April actually closed bearish. And remember, we're looking forward to trade on Wednesday, 19th April. And by the looks, 19th April is not a valid day to trade because the previous candle here actually closed bearish. Let's see if the following day after 19th April, if it's going to be a valid day. If you check here, you can see this candle actually also closed bearish, so we'll not be looking forward to trade on the 20th April of this month. Let's see if 21st April is actually a valid day to trade. Okay, so you can see here this candle too actually closed bearish, so 21st April is not a valid trading day. Let's see if 22nd April, if that day is actually valid. So if you go here, you can see this month too actually closed bearish. So on Monday, 22nd April is not also a valid trading day. See here? Yeah, you can see here. Monday is not, yeah, Monday. You can see here we have Monday 24th. So let's see if this candle closes bearish, but from the looks of it, you can see that this candle will actually cause bullish. So it means 21st April is actually a valid trading day. But before going to the M15 to search for entries, let's go to the calendar and you see if the calendar confirms if this 25th April, if 25th April is actually a valid trading day. Let's go to the calendar. Going to the calendar, you can see here 25th April. This day is actually a valid trading day. So let's go to the M15 and look for an entry. Going to the M15, the first thing we do again is measuring the impulse move. You can see the impulse move here. The impulse move we had is 66 pips, and so far the market already did the retracement. But then let's see if this move here that it made, if this move is more than 40 pips, more than 45 pips, then it means that we will be waiting for a 40 pips retracement for us to be sure to look for entries at that point. Let's see if this is more than 45 pips. Okay, if you see here, this is less than 45 pips, so it means we will not be looking forward to any retracement of 40 pips. We will enter on any W pattern that is formed at this point, as long as it is formed in our entry time frame, in like our entry time between 5 a.m. GMT plus 2 to 8 p.m. GMT plus 2. So you can see from here, let's see, for there is not any W pattern that has been formed yet. Let's wait for a W pattern. There we do not have a W pattern yet. There we have a potential W pattern to be formed. Exactly there. We have a neckline here because remember, down, up, down. We're just waiting for a candle up that should close above this neckline here. So from there you can see, let's wait for a candle. Okay, you can see here this candle actually closed above the neckline. So let's see if H1 supports this. This is 8:30 a.m. So the H1 that closed from 7 to 8 should have closed bullish for us to be looking for an entry at the retracement of this neckline. Let's go to H1. If you go to H1, you can see here from 7 to 8, this is very much bullish. So our entries should be after the closure of this candle. So this candle will close at 8, so our entries should be from 9 to 10. Let's go to M15 and you see if that rule actually, remember it's from 9 to 10. Here we have Okay, this is from 9. So this here would have been our entry. Wrong. Yeah, this one would have been our entry here. Then we buy. Let's see how this will go. Remember, you go break even after 20 pips, after the price has moved 20 pips in profit. And okay, you can see there we'll be having here our first loss, which is -1. So remember, after this one, now will not be 6R profit, will be going down to 5R profit, which is very much enough. But we are still on the 25th April, and this is on Tuesday. Let's see if we can actually trade on the 26th April. Since it's a loss, we can actually be trading on the following day. Let's see if that following day, which is 26th April, if that day is actually a valid day to trade. Let's go to the calendar. Going to the calendar, you can see here 26th April. Here it's a valid day. We do not have any USD CPI, USD PPI, CAD CPI, or JPY CPI. So on this day, this AUD CPI does not affect our CAD's JPY pair. So this is actually a valid trading day. Even here on April 27th, this is also a valid day to trade. But then let's go on daily and we see if daily actually agrees with the idea of this, the calendar days, for it to be actually valid. Let's go in daily and we confirm that idea. Coming on the daily time frame, you can see here on 25th April actually closed bearish, so we'll not be looking forward to trade on the 26th April because this candle actually closed bearish. Let's see on Monday 26th April if that candle closed bullish so that we can actually trade on the following day, which is 27th April. Let's see how that candle closes. You can see this candle actually also closes bearish, so we'll not be looking forward to trade the following day, which is the 27th April. Let's see. Yes, you can see this candle actually closed. This candle actually closed bearish, so we'll not be looking forward to trade this day. But then this day, you can see this candle actually closed bullish, but then this is on Thursday, and we don't trade Fridays. So even if on Friday, this candle closed bullish, we are not trading any Fridays. So Friday is not a valid trading day. And if you check on Monday here is 28th April and it actually went up. That's why most of the times I wait for the previous daily candle to close according to my bias because it it's logical for you to look for buys in a buying market than for look for sells in a selling market. As long as the previous daily candle is actually buying, it's safe for you to look for buys in the following day. And you can see here I would have looked for buys, but then this is not a valid trading day. And if we wait on Monday the following day, even though it was valid, you can see this is the 1st May and this is in another month, and we do not trade that. And this marks the end of our backtesting episode, which is for CADJPY for April 2023. Let's go to M15 and we see the P&L of April. You can see here from the M15, in all this month we just had 3 trades. We just had this trade here on Monday 10th April, and this trade here which is from 18th April, and this trade, the last trade here, which was on the 25th April. You can see here in 30 days, probably like 24 days, because if you take out the weekends, you only had 3 trades, like 3 trading days on this trade. What this will tell you is that you need patience, because to wait for all these days to only search for your trade that are in the trading plan, that's the worst, that's like the very hard thing that traders are failing to do nowadays, because you feel like you want that dopamine effect, like you need to be in the market, like to be you want to be included. And which is bad because sometimes, not sometimes, but all the times, when you have a trading plan that you're following which has an age, and remember that something to have an age, you need to backtest it to the fullest and forward test it to the fullest for you to know what strategy has an age. And when you know that your strategy has an age and per month it does not give you that many trades, but then you still feel like you want that to be that trader who's very much focused on the quantity of the trades rather than the quality of the trades, you find yourself forgetting about your age and you keep on looking for trades each and every day, even if there is one rule that tells you not to trade. I'll even give you a very simple example. For example, here, remember we have the calendar rule that you really have to follow. You have the daily rule that you really have to follow. You even have the M15 rule when it comes to impulsive moves and retracement that you really have to follow. Then you have the daily move that you really have to, not daily, but H1 candle closure that you really have to follow. So if you don't follow any, like if you just decide to not follow any one of that rule, you find yourself not trading your trading plan, and that's when your edge will not be working because you'll be altering a condition that you have to follow and that your edge that time will not be working. That's why most of the times I'll repeat this again. As a trader, you have to be restricted, and if you give yourself restrictions, you should also have that discipline which is high enough for you that will let you follow your all the rules that you have in your trading plan. So that is all for this trade. Remember, if you have not liked this video, if you're new, remember to subscribe, and if you're an OG here, if you have already subscribed, just make sure to like this video, because I know many people watch these videos but not actually like, because when you like, this video will be suggested to many traders like you who need to learn, because this is a trading plan which is very much tested. I've tested with you guys from January, and right now we're on April, and you can see month after month we're making trades. I'm not hiding anything, I'm showing all the rules here. So if you're learning, don't forget to like, and don't forget to subscribe again if you have not subscribed. Also share to your groups, share in WhatsApp, share to all your friends who will really learn from this. And this is all for this month. Be on the lookout for the month of May, and that video, remember, it will be out on Wednesday next week, because my schedule right now is Wednesdays will be for backtesting videos, and on Sunday we'll be posting, not on yeah on Sunday off or Saturday. I'm yet to decide on those days what we'll be doing, but it's probably on Saturday. On Saturday, what we'll be posting is the challenge series, because those videos will be going out every Saturday. So until next time, is your girl, the Rwandan Trader. Bye.